we're just about wrapping up.
Yeah.
Invest Hong Kong. You kick things off with the financial secretary. What stood out to you?
Well, it's interesting, right? When we started off with talking about the momentum that we're seeing in the economy, right? When we talk about the AI boom and exports and imports, that's really flattering growth. You have the IPO market that continues to be hot.
Well, the momentum continues to be quite strong. Take the IPO market, for example, the number of companies queuing up for listing, over 400.
So he thinks that things can continue in some ways, but then again, the regulatory environment is changing. The wings have shifted now after what we've been covering the last couple of weeks, where Beijing has clamped down on the sort of illicit cross-border stock trading. And whether this actually filters through or spreads to other parts of the financial services sector, like, for example, IPOs, the wealth side of things. And really, Paul Chan says, he's certainly said to downplay those concerns. What are you hearing on the ground?
Number one, the central authorities are very supportive of Hong Kong. They want Hong Kong to succeed as an international financial center, so no doubt about it. This is one. Number two, the recent crackdown are mainly on those people who move their funds to Hong Kong for different investments, not full legitimate means. So if the capital inflow are in the proper channel, they still are encouraged.
Compliance is a good thing. I think it's a message that I got too from Bonnie Chan when I spoke with her about the very topic. She didn't seem bothered at the very least.
I feel that global investors have now really turned their focus back to this part of the world. And 2 years ago, I probably will still be trying my very best to debate whether or persuade global investors about the investability of China. Now, I think the assumption is it's very investable.
Yeah, and I think that echoes kind of what Susan Chen, the head of APAC for BlackRock, was saying, that they see this AI tech sell-off as some sort of opportunity for them, because that's what clients are wanting at this moment when things are volatile, that they can actually do selective positioning here to try to gather some returns.
Clients are willing to put money to work. Every sell-off, we don't see a rush to de-risk. If anything, we do see selective position risk on again, and we're seeing that yesterday. So I think, this is an opportunity for us to look at where there are pockets to generate that alpha return, and our investment teams are doing that. Our clients are expecting us to do that. Sure, the markets are volatile, but when markets are volatile, that is the opportunity for us to generate excess return.
There we go. So I think the headlines and the base comparison from last year are not as flattering.
Yeah.
We are comparing, of course, a fantastic year that Hong Kong had in 2025. And so far, 6 months into the year, it does seem that people on the ground are a lot more optimistic than what the headlines suggest.